Hi guys, this is Simon with Trade and Perform Coaching, going over the trade review for Tuesday, the 13th of May. And man, what an incredibly boring day. There were some trades there, and we made a little bit of money, but I'm glad I cut out at the middle of the day. So there's a couple things that I want to address right out of the gate. First of all, if you look at the opening range, right, how do you determine whether you are going to have a slow day or not? Okay, so first of all, the opening range was, 1892 to barely 1897, right? 5 points, and that was generated in the first half hour. So that's a very small range for the first 30 minutes of the day. We could have easily expanded on that, right? But by the time we get to 10:30 in the morning, we haven't gone much past that. You know, we've added another 2 points, 7, maybe almost 8 point range, I guess, from top to bottom, right? Secondly, what were the other indicators that we were going to have a very slow day? Well, the first one was we weren't able to clear above Globex highs out of the gate, and we weren't able to test Globex lows in the first half hour. That's another sign that we were going to have pretty much a very, very slow day. It wasn't an inside day, but it traded as if it was an inside day, and it definitely was a day of balance. If you look, well, I guess you can't look at the market preview because I forgot to record it. However, if you look in the market preview, you'll see that if you attended this morning, that what we expected was a balanced day. That's a very normal pattern, not for the last 6 months, but if you look in years past, right? We have a day where we came out of balance. We had range extension up, trend day up. The following day tends to consolidate those gains, and that consolidation can sometimes last for 2 or 3 days. Obviously, these new highs, I really don't know what to expect one way or the other in terms of whether we'll continue up or we'll continue down. I do know what areas are critical. So the first thing that I want to talk about, I called this particular move into prior day's highs that I'd be looking for long right out of the gate, and I was able to attain those 2 points pretty darn quickly. And then vice versa, when we moved up and we trapped after attaining new highs in the first hour, and then we trapped back below that, I was able to attain a trade to the downside. I don't think I called that out on StockTwits. And then on the last trade I did call out, which was I said that we were looking for a trap right near New York lunch. And right part of New York lunch I entered, I believe it was 1892 3/4. I was able to attain my 2 points right here. I actually took 7 ticks and I got out. So the question is, how was I able to do this without breaking down the trap trade? I want to show y'all something here real quick. If we go in and we insert NYSE tick, okay, so the first thing that I notice here when I look at the tick is that we were plus or minus 500. Really, just the entire open, this tick was indicative of nothing. And we got exactly what the tick showed, which was not a bearish bias, not a bullish bias, but a balanced bias right out of the gate. What typifies a balanced market is a head fake breakout, right, which is what we got here. This broke to the upside, failed, we go back to the other end of the range, we head fake break down to the other side, and then we move back to the middle. Okay, so that was basically my trading strategy today. That's exactly what I was looking for, was moves back to the middle. I thought we would be in balance. We didn't have an open drive higher. We were unable to get above Globex highs and hold, and we were unable early in the session to get below Monday's high and Globex lows. So I don't want to dive too deeply into this. There's a couple of keys to surviving a day like today. First of all, don't overtrade, right? This isn't that hard. When you see the tick plus or minus 500, there's not a lot to do. Pace yourself, right? If you had 10 trades on a morning like today, it's hard to believe you're trading profitably. There's very few people who can pull that off day in, day out. Secondly, there's a rhythm to the market, and the market tends to make directional move, consolidate that move, and then decide whether we're going to come back in and fill back below, or if we're going to continue. One of the things that helps me be successful is I don't assume just because last time we broke out that we ripped straight up that's going to repeat, and I don't assume just because we didn't run after breaking out that we're going to fall back into the range, right? I simply look at what's immediately in front of me, and I trade what the market's presenting me without coming to a hypothesis. One area where a lot of day traders get in trouble is they try to look at day trading as if it were investing. For example, let's say I looked at LinkedIn and I said, well, LinkedIn, should be by the end of the month is going to be, hell, I don't even know where LinkedIn's trading anymore, but let's say it was trading $50, right? So I say, well, it should be trading $60. I'm buying the dip here. Or vice versa, right? Should be at $40. I'm shorting the run up here. If you look at the market, the ES or the YM or the GC, any of the futures contracts in that way, you're trading with so much leverage that your opinion on where the market should be in a day or two from now could bankrupt you if we deviate even for 24 hours, right? So what I try to encourage my coaching students to do is forget about what you think the market should do. Forget about what you know about larger picture market structure, right? Trade what's immediately in front of you. So since we have a couple of minutes, and then I'm going to wrap this up because there's no need to kill everybody here. First of all, the most trades I see should be about 1, maybe 2, 3, 4. I see about, if you had any more than 4 trades, you were probably way overactive for today. Same thing in NQ, right? NQ had pretty much the same pattern. Let's see if I can find it here real quick. This was NQ today. I'll clean up the chart for you really fast. Okay, so if you looked, I spoke about the 15-point rotations in NQ today. We had those in spades, up and down, pretty straightforward trading. We tested Globex low, we tested Globex high, failed from there. We failed at the first hour high, right? And then we failed to get below first hour low, and we essentially ended up with the exact same thing here. There was pretty clean entries down here, there was pretty clean entries up here. But what this told me again was that we're simply consolidating the move from yesterday, and no one's made any decision in terms of who's going to be more aggressive, the buyers or the sellers. Remember, there's always an equal number of buyers as there are sellers. There's not more of one or the other. Every contract changes hands from a seller to a buyer. It's simply a question of who's more aggressive in their pricing or in their selling activities. Okay, so before I let y'all go, the last thing I want to leave y'all with is kind of a picture of where we should be. Let's get rid of all this. Okay, so for tomorrow, first of all, we know that we have an open gap sitting right here at 1873.50. I would expect responsive buyers the first time down here, and this is obviously just about 12 points away. This could easily be attained tomorrow, and I would look for an initial, at least, upside response. If we didn't get an upside response here, it would tell me a lot about the ideology of the market and the likelihood that we are probably going to move lower if we're unable to garner a buy response at this point. Okay, the next thing that I want to look at, right, is that all these closes at this point over the last couple of weeks, everything is opened and closed below 1878 3/4. If the market's truly strong, right, we could certainly have a backside test of that 1878, obviously all the way down to 1873. But I'd want to see the market maintain a close above 1878.75, and if I don't see that, I'm going to make the assumption that we're locked back in the range and we'll be open to the possibility of moving lower, but not until I see us trade below this critical area right here while I make that assumption. In the meantime, I'm going to assume they were able to break it out to new highs, and that we could certainly, on the upside, target anywhere from 1910 to 1920 tomorrow. I think is certainly, and maybe even on a good stretch, 1925 is certainly within the realm of possibility. On the downside, if we get below this 1873, it certainly opens us up to testing the lows back again here at this 1860 to 1863 neighborhood. And then from there, we'll see. We either get a gap back out of range. I mean, obviously, I guess I'm doing exactly what I told people not to do. Tomorrow, range-wise, right? Well, if we assume the normal ranges up and down, right? 1860 is certainly a stretch, but possible to get down to. And on the upside, 1820 to 25 would be a stretch on the upside, again, barring any significant news or world events. Okay? We want to generally see it hold above this area for the bullish case to continue, and for the bears to get any kind of foothold at this point, they're going to need to see it below in this area down here. And I'm certain there's a couple of bears saying prayers tonight trying to get it down there. That's all I know for tomorrow. I'm not prognosticating out beyond that, and I'm not even making an assumption, if you'll notice, of what the market will do. I'm simply saying if, then this is my assumption. If we get up to this point, this is my assumption. So I'll be looking, right, for responsive sells up here, and I'll be looking for responsive buys both here and here in this area tomorrow. Obviously, I'll have the trade plan more detailed, and that's it. I'm not thinking any more about the market beyond that. I find that trying to break down the market on a point-by-point basis is futile, and I'm also finding that when you trade, when I work with traders, the less you think about anything beyond today, right, the easier it is for you to make money. Too many traders, too many day traders get involved with, number one, politics, number two, economics and trying to interpret what the economic data is, and number three, where the market should go. If you can instead shift your thinking to if we hold this area of structure, this is advantageous to the buyers. If we get below this point of the structure, it's advantageous to the sellers, right? And then you got to remember that even if we get down into this area where the sellers need it, right? Remember, this would be a very nice stretch down here, and it would not be shocking to see a response back up into this area. And even with that, right, a fallback below, we auction all the way down into here. Even with that, if we close here, right, and then we gap back up the following day, buyers still had control. This would just end up being a potential shakeout to the downside. So you got to remember, if we're stretched and we're down 25 here, don't jump for joy because the bears still aren't out of the woods, right? You can expect responsive buyers down here to push back up, just like they did every other time we were in this part of the woods, right? Responsive buyers have stepped back up and pushed back up consistently. So before we get a bearish scenario really to fulfill, right, we have to get underneath here, probably withstand a test back in this area, barring news that would just drive us lower, right? And then we get our decision up or down, right? And obviously if we never get a test of this area or we never come back and test this area, well, in that particular case, the shorts are totally screwed and they're going to be squeezed to the upside. And then the third choice is we continue frustrating people, right? We've seen scenarios where, look, we went through this massive area of base out, right, for days and days. We gapped up. It looked like we were going to break out. We bounced for 1, 2, 3 days. Finally, on the fourth day, we gapped, and it looked like we were finally going to go, right? And they smoked everybody to the downside. Okay. Keep that in mind. Okay. Nothing is set in stone. We'll make our determination both by the structure that the market opens by and also Globex high, Globex low, with open drive or without open drive, right? And then finally, what will the tick look like? Are we in balance or are we out of balance? And so clearly the close is generally would have to be considered bullish, right? We know where we need to get underneath in order for the bear case to pan out, right? And so now we need overnight to fill in to give us additional clues in the morning, and then we need to see what the open looks like, and then we'll make our determinations from there. That's so much more of an easier way to let the market set up for you versus coming with a presupposition of what the market will do or should do and then trying to force your theory upon the market. Anyways, I hope that helped. My name is Simon. I'm tired. I need to go out and get on a run, and it's already 9:30 at night. So I'm going to do that. I hope everyone had a great day. Do not be shocked if we spend a good deal of the summer looking like today, where you have to get it done in the first hour and a half, or you go home with nothing at all, right? The more you press the end of the day, the more frustrating it'll be. Anyways, we'll talk to you later, and have a great night. See y'all tomorrow morning. Everyone's welcome, by the way, to the market preview. Starts at 7:45 Central Time. I will post the link to get into the meeting at approximately 7 a.m. We'll see y'all tomorrow. Have a good night.